Hello. I'll be just a few minutes because I'm just recording my screen because I'm just recording some level 2. Well, I'll share my screen. I'm just gonna be a few minutes. I'm just recording this level 2. We're sitting on 42.99 with this massive area, 960 lots of orders, and it hasn't broken through. And I just want to watch it decrement. You see it decreasing as it's trying to break through, but it's just holding. So look, it's still at 970, 965. So someone there is just holding it up. And so I'm just recording it because I want to watch it and play it back in slow motion to watch it come down, decrement to 950, still holding. That makes it better to see. Look at that. So 42.99. Although I might just stop in a second. Sorry to hold you up. The reason I wanted to record this is because very, very rarely get to see almost 1,000 limit orders sitting at a level. I don't think I've seen it much more than 2, 3, 400, maybe 400 is normal. I'll stop this in a second. I think most of us are here now. Yeah, look at that. Can't break through. Just stop button. Working. Yeah, camera's back. Hello, how is everybody?
Hey guys.
Sorry for the
No, that was cool.
level 2. How's everyone's day?
So far
Pretty
better
good.
than yesterday.
But I mean, I guess it wasn't a great day because I chickened out a couple of times, so I broke my plan a couple of times, but working on that. It's tough, like when I take one or two green trades right off the bat to keep going, because
Yeah.
you don't want to give back any profit, but working on
Yeah.
that.
I was similar to you today. I was green from the pre-market, and what upsets me the most is I was long at the very bottom today, and I took a few small scalps and bottled it. Most all I had to do is just leave one contract long, and look where it is now,
I
back in
know.
the top.
Mhm.
That's fine. I'm working on it as well. It's a fear of giving back profits when you've got them, I think.
Yeah, that's the problem,
Yeah.
And I've noticed that it's like I play poker and I don't have that problem when I play poker. It's not like when I win a couple of big pots that I'm all of a sudden super tight and only playing
No.
aces and kings, right? So I wonder what it is.
Interesting. Yeah.
It's funny because I always feel better when I have profits.
You feel like you have
Sunshine.
a cushion or something like that, yeah?
Yeah, yeah. I get a little, I seem to have a little more confidence. Like, okay.
Yeah.
Yeah, it's interesting how everybody thinks, right?
Mhm.
Yeah, I think. Yeah.
Yeah, I mean, I don't think it's the right way to think. It's just, it's funny what my brain will tell me. Like, that's okay. You have wiggle room.
Yeah. I think for me, because I was green from such an early start today. It was at 6
Mhm.
a.m. It was a long day, and I don't want to give. I've been green all day, and I don't want to give any of it back because it's been green all day.
Mhm.
Whereas maybe if my first trade is at 2:30, or sorry, 9:30 your time,
Mhm.
then maybe I would have been a bit more gung ho and thought, oh, it's a higher risk trade. I'll take it, but
Hmm.
couldn't really get a direction on the market today. It's a difficult one.
Yeah.
It
And
was
your
early on.
willpower to stay out decreases, right? As the day goes on. You're
Yeah.
sitting there for half an hour and a half. You haven't taken a trade, And then all of a sudden there's a semi setup. You meet maybe 50% of your rules and you're like, good enough. And you
Yeah,
take
exactly.
and then
You
you
know,
lose,
out of boredom, you take it.
right?
Mhm.
So, so you look different, Glenn. Is it beard or
Yeah,
hair?
Wow. Yeah, I haven't cut my hair in a while, but I shaved.
you
Ah,
shave.
I
That's what it
forgot I
was.
did that. I forgot I did
very sleek. I thought somebody had stolen your computer. Didn't recognize
You
you.
look different.
Honestly, I
You look
really
good.
that.
didn't recognize you straight away about your beard. Yeah,
It's crazy. It's crazy how different you look, eh?
you do look totally different. Okay, so we might as well crack on then. Oh, hi Andrew, how are you?
Good. How about you guys?
You're not too bad. How was your day?
Green. So
Oh,
can't
good.
complain. I did kind of ignore my 4,300 level, but whatever.
Yeah, I was back there now. You can't ignore it right now.
Yeah. Well, yeah, my whole game plan, I was kind of bullish pre-market. And then I
Okay.
was like, well, I'm not going to take along until it holds over 4,300. Prove to me that it's strong. Then it hit 4,300 and then rejected real hard. And I was like, oh, I guess I should have gone short. But
See,
I ended up
yeah.
going short when it retested the VWAP and had a nice big red bar and got out on that same bar that I got in on. So I was like,
Oh,
well, good
nice.
enough.
Oh, that's good. Yeah, brilliant. That's
Yeah.
good.
And then in relation to today's chapter 6, I kind of got in on an ending volume bar and then went just for a scalp since it was counter trend, just to scalp up a couple points and got out. I was like, well, I'm gonna call it a day because I'm done.
Brilliant. That's not a bad day. On
Yeah.
the subject of chapter 6, when I was reading through it earlier, I took a trade today which went right against chapter 6, and I'll show you that later. So when I looked at it now, I bought it on on bottom tails, and there was an anomaly, and on hindsight it's obvious, but I didn't really notice it at the time. So anyway, and I don't know if Joanna says she's stepped away. I don't know if Joanna's back, but if you are, how was your day? No, I think Joanna's still stepped away.
Mm.
Okay. Let me share my screen. So I've got the Kindle book version open. Just declutter it a little bit. So that's interesting. I was recording this earlier. I wanted to see it break through this level at 42.99, and we almost had almost 1,000 orders sitting up here, and it just wouldn't lift. It wouldn't go through it at all.
Yeah, I
So
don't think I've seen that high of a number on
no,
a book
likewise.
rate
That's
before.
why I was really curious, and that's why I wanted to record it. But it is literally a barrier. I've only ever seen up to like 400 maximum. I think 450. Don't think I've ever seen it above 500. So yeah. So
Yeah, I saw two 400s around the 42.71 and like 42.69 this morning. And I was like,
okay.
whoa,
Yeah.
that's how I was picturing a bounce there, but it ended up just crushing right through. I was like, whoa, okay, I guess doesn't matter too much.
Yeah, exactly. But look at that. It couldn't have rejected it any better. Exactly what you would expect it for a number that big. So, I'll move that out of the way. I've got so many screens, so many apps open on my screen right now. Can you see my screen okay?
Yeah.
Yes.
Right. Okay, so chapter 6. So if we just recap the last few chapters, it's been a while. We looked at 4, didn't we? So for chapter 4, we discussed the principles and was it Wyckoff theory and validation. So a wide bar must have wide volume. A narrow bar should have low volume, or to validate it. And we looked at some anomalies on single candles, multiple candles, and then we were looking at accumulation, distribution, testing, and then selling climates and buying climate. Then you recognize remember these pictures: accumulation phase, distribution phase. So pulling in, that's kind of where we are right now, potentially on MES. In fact, earlier on, you can see the accumulation phase on MES. This phase was pretty much that area down here. And then we had the breakout, and we had the small test as well. Where did I see? I thought I saw a test coming out, a low volume test. That one there. And then, although candles in the wrong direction, but that's fine. And then I told you my computer's slow, so I've got so much I might start shutting things down in a second. And so now we're on chapter 6. It's quite a biggish chapter. Hopefully we can finish it within an hour, but if not, I might have to do it in 2 parts because I've not had dinner today and my stomach, I've literally not eaten anything today, which is not good. So my stomach might overrule if we get past 9:30. So in this chapter, we're going to be looking at candles, the shooting star or the top and tail candle, the hammer, which is the bottom tail candle, and the long-legged doji candle, and then that one there, the long-legged doji, and then finally just briefly go over widespread narrow candles, which we already know about. Hanging man candle, which you know what, I totally forgotten about this, and I'm glad I read it today. And stopping and ending volume, which we know about anyway. So hopefully we may not take too long. So just remind us of the principles. So principle number 1, the length of any wick, either the top or bottom of the candle, is always the first point of focus because it instantly reveals impending strength, weakness, and indecision, and more importantly, the extent of any associated market sentiment. So basically, that's the first principle. Principle number 2, if there is no wick created, then this signals strong market sentiment in the direction of the closing price. So, for example, we look at the wick to get an idea what's going to happen, and it's quite a nice rejection there. And this candle with no wick or very small wick gives you an idea. That's principle number 2. Principle number 1. Principle number 3, a narrow body indicates weak market sentiment. A wide body indicates strong market sentiment. So we've got some wide bodies and there's probably some narrow bodies in there somewhere as well. Yeah, you know what a narrow body looks like. Principle number 4, a candle of the same type will have completely different meaning depending on where it appears in the trend. Always reference a candle to the location within the broader trend or in the consolidation phase. So what that means is basically a hammer candle may indicate a reversal, but if you see a hammer candle higher up like this one here, which we're going to find out later, that may not indicate strength. Sorry, a hammer candle at the bottom, I'll draw it in, may indicate a reversal in strength in the change of trend, but the hammer candle up here will indicate the opposite. It may indicate weakness, because it's so you've got to rely on what part of the trend you're looking at, whether at the bottom of the trend or top of a trend. And this, remember this, we're going to talk about this one, the hanging man. To me, before today, and I'll tell you, I would see this as a candle of strength in an uptrend, but it's not. But we'll get to that. So principle number 5, and that's it. So they're the 5 principles, which is basically common sense and kind of builds the foundations of what we're watching on VPA. So the shooting star candle. Also, I put a note there. Also the top and tail candle, if you're in PTS, is one of the 3 Anna Coulling says of one of the 3 premier candles in VPA to watch out for. So you've got the shooting star, the hammer, and you've got the indecision, but the long-legged indecision candle. Shooting star candles appear in every trend, both bullish, bearish, and at every point in trend. Their appearance does not signal an immediate reversal, and their appearance signals potential weakness. So it's important to know. I don't know about you, how many times have you got into a trend because you've seen a shooting star candle at the top, only to see it just faff around and then push back up and stop you out. So I've got to get better with this as well. So shooting star is only indicating that there's potential weakness on the way. So in a bullish uptrend, any shooting star with below average volume simply signaling the possible pause in an uptrend. with potential for a short-term pullback, which kind of makes sense, common sense. I'm trying to find an example. It's funny, when I was reading this without anyone watching me, there's examples everywhere. So looking for a pause. Here we go. So potentially that candle there is a potential pause, which is kind of makes sense because we are coming in a downtrend, pulling back. I think that's what it means. Anyway, as the trend develops further, this initial weakness may be confirmed further with additional shooting star candles. And so where's the shooting star candles? Do you know what? I didn't look for shooting stars. When I was doing my examples, I was only looking at hammer candles, but we can see, I'm just trying to find some shooting. Here we go. So shooting star candles. Got a
There was
couple
a
here.
great one at 12:30 on the 2-minute on the ES.
Oh, 2 minute.
It hit the VWAP and big volume and then went down 10
That
points.
one there.
Yeah.
Which is exactly the screenshot I took. Took some screenshots earlier. That one there. Yeah. Thank you for reminding me. I did take some screenshots today. So this is this the candle you're referring to, that one?
Yep. Yeah, I mean that's a good example of one. I mean, there's obviously going to be plenty of other ones where they're not very good.
No, that's right. Yeah. So, but that's a perfect one. And do you know what? I kicked myself when I was reading the book and I looked. I thought, oh yeah, it's quite obvious, really. So that's a perfect example today, and it's at a level we was watching, or a level I was watching as well. So it kind of ticked all the boxes. Once we have two candles, we don't really see two candles, but we potentially have a shooting star candle there as well, which may signal the start of weakness for potential pushback down. It says once we have two candles of similar proportions in a trend and in the same time frame, we can then compare volume between the two candles, and we can see that candle there was just slightly above average volume. It's the white line on, you can't quite see it. And then that candle there, this blue candle means ultra high volume on the indicator. So that's definitely signaling a reversal. So that's two candles lined up. There were some better. I did see another example where we had a couple of candles in a row. In fact, there was another example of an anomaly as well, which I'll show you in a sec. So then the second with increased volume as well, which we've seen as well, and this is confirming further weakness. And then it says brings it to an important point we'd like to introduce here, perhaps an obvious point, but nevertheless one worth making note of. If we see one shooting star, this can be taken as a sign of weakness. If we see two consecutive shooting stars or two relatively close to each other, this is an increasing the bearish sentiment. If a third appears, then this is adding yet more to the bearish sentiment. So we talk about it sometimes, don't we, when we say we've seen the Freddy Krueger fingers. That's kind of what I'm watching for, the 3 in a row. So I don't need to explain the rest of that. So we've got this nice diagram here showing the shooting star low volume, average volume, and ultra high volume, which you can see it here. That little shooting star here was average volume, didn't have any on low volume, and we had the one ultra high volume one. So that's why she explains on, was it in that point number 1 she makes, the wick is the first thing to look for. And that gets your attention to any trend. So if you start seeing bottom tails or top tails at the end of a bottom of a trend, then we need to start sitting up and taking note rather than just sitting there ignoring it like I did today when that came along. So so if we see these signals appearing after a period of sideways price action, then this gives the signals even more strength as we're validating with volume price analysis, as we are then validating our VPA analysis with other technique of price analysis, which is support and resistance. So what she means by that is if we see a candle at an end of a, that's not just a screenshot, but at an end of a distribution or accumulation zone. Just looking for some charts. I don't think I can't see one, but yeah, so basically we're watching for that at an end of consolidation, and that will add to the sorry, been a long day, my brain's not quite with it at the moment. That will add to the strength of what we're watching for, basically. So got this nice diagram here, and technically the screenshot we had principle number 1, that's what I was thinking of. So in an uptrend, we see the first hammer candle, and we don't know we're at the top of that point, and we need to wait for some validation. That's the words I was trying to find a minute ago, validation. So we don't know, and it's quite a good diagram. So then we see 2 topping tails, which technically, if you weren't watching that one, I don't know whether you'd say these are too close together or not, or whether it's just a V reversal, but you've got a little mini head and shoulders pattern as well for a potential reversal here. But having 2 candles in a row and one with increasing volume as well, that will add to the validation and make it a more higher probability trade. So yeah, basically she's saying that the market doesn't just turn on a dime like it did here, for example. It needs time to turn, and it needs time to turn around like an oil tanker boat. They turn the engines off and it can't just turn around. It needs to take time. It may even go higher a bit. So I'm only using this one chart. There's probably better examples as well. If I go into MES 2 minute as well, and lots more candles. Here we go. This is a good example for later. Remind me about that one. So here, not really a hammer candle.
Check out that little section there around I don't know, 140.
140.
Those Kruger fingers there.
Oh, those ones there.
Yeah.
Well, technically, that is an anomaly, which we'll get to in a minute. But yeah, you would expect that to break down low. If you saw that, if I saw that on the 5 minute chart, my order would have been sitting there waiting. But the anomaly is we had a topping tail. There's a volume on relatively high volume, or it's just below average volume. So low volume, you can say it's below average. Then the next topping tail, this green one, was on low volume. Do you remember that goes against what she says now? So that's not validated it. And then this candle is on even lower volume. Well, it's still way below average volume. So that's not validated that reversal. So, and we can see it's not validated because it's only gone in that direction afterwards. So that's a good example actually of this page here with the volume. I was trying to find an example where it does validate it. Here we go. Potentially. So we got, it's a hammer candle there, so it's a bottom. I was trying to find shooting stars, but we've got this hammer candle in high volume as well. And then we had this candle down here. It's below the average volume, but it's not low volume like these candles. Look at, and then you had this candle here. Look at that, ultra high volume as well. So, and then we could be looking for potential reversal around this point now, based on the fact these hammer candles are getting high volume. But like I said, it's an oil tank. It doesn't just stop. It may still go down a little bit lower. So that's why you can't just get in on the break or at a level when you see a hammer candle. If you're being risk averse, then you need to wait for some form of validation. And what is the validation here? Possibly the breakout of that area, or the break and retest of this area, whatever is in whatever part of your plan. So maybe getting at that point there for the move up. Not sure. I would probably also look. We was looking at this trade earlier, weren't we, Glenn?
Yeah.
And we were looking at, we drew the trend lines in. Maybe the validation for today should have been a higher low, get in on the next higher low. So that position there, or that position there, with our stops below there. So I don't know. Would you say that validates a potential change of reversal?
Yeah, I mean, if we get over that candle, sure. Like
And that one there.
that bottom tail on that candle could mean a lot of things, right? It could mean a lot of people shorted there. The people that were already short got out there, and some bulls getting in long there, right?
I don't think it means people shorted. I think it means there's a lot of buyers there, because at one point this was a full red candle, and then the buyers came in and just pushed it all the way back up, and it's on massive volume as well.
Right, yeah, that's why I'm thinking. See, if you look at the candles that retracement before it, it looks kind of like a bear flag, right? I'm not saying it's a good
It does,
short.
yeah, you're quite right, yeah.
I'm not saying it's a good short. I'm saying like retail traders, newer traders might have jumped in short there, right?
Exactly. It was a bear trap flag.
Yeah, it was a bear trap. Exactly, exactly. And then the
Yeah.
experienced traders that were short from like the beginning of the day may have gotten out there, right? So
Exactly.
that huge volume, I wouldn't say it's just buying volume. I would say it's covering volume and some newish traders getting short and getting screwed over. But
yes, I agree. This
that being said, if we
probably
get over that, what's that?
This is the smart money, I think.
Yeah.
The inside.
Yeah.
And everybody was watching for this flag break. You're right. All the newbie traders were watching for this break. And they knew it's going to happen, because obviously the volume was reducing, and as we just described. And then as soon as it broke, all of these all of everybody was getting into this trade, and the smart money was just lapping it up, taking it off, just selling their shares to whoever's going to take them.
And as soon as that candle closed, all those people that jumped in short got trapped.
Exactly that. And so when it came back down here again for the second time, people who were trapped in here were just relieved to get back out again. So and then that was the start of the move back up.
Yeah.
So yeah, but it would have, that's difficult, because even I probably would have been fooled into that as well, but without knowing what the volume was doing. Heavy volume as well, it came, so you got a big bar with big reaction as well. But as soon as it's come back up, the people who know what they're looking for, they would have got out the instant they saw it reversing, or majority got out for break even, leaving all the others trapped in there.
Right.
So yeah, so that's not a bad example for that. Shooting star. Where were we? Excuse me. I think we're here, weren't we? So we had a bullish trend developing, and shooting star kind of appeared above the average volume. The chart now has our full attention, so that's why we're watching it. As I mentioned earlier, the market does not turn on a dime. We just talked about it. Pauses, reflects, then rises, pauses once again and falls. Or in this instant, we see that little bit of a spike out. And then we wait for the next candle to form to see if it's conforming to this weakness. And on that candle, I know it's the opposite to what we're talking about. On that candle, it didn't form. It showed weakness anyway. So this is where it says, on the appearance of the first shooting stars, our cue to sit up and take note. It's a cue to go and check all subsequent candles for confirmation with an initial weakness and try to deduce with VPA whether this is a sign of longer term weakness or merely a temporary pause. And then obviously we want to be looking at other time frames as well to see whether other time frames will collaborate with that position. So for example, what's that, 11 o'clock, that candle? Look at the 5 o'clock, the 5-minute candle at 11. So there we saw this candle here come in. Is that 11? Yeah. So that came in at the same time. So it was a break of this bear flag. And then the next candle was a slightly smaller candle on same volume. There you go. Now we've got an anomaly. We've got this larger candle, but on less volume as well. So potentially we're seeing some weakness around this area. And do you remember in an earlier chapter, she talks about macro, micro, and looking at the charts on a macro scale. No, looking at charts on a micro scale, that's comparing candles, the current candle with the previous candle. That's looking on a micro scale, and then comparing it on a macro scale where you're comparing the current candle with the previous candles, and there's several candles at once. And then the global is then flicking between time frames and comparing your time frame, what we're looking at with the time frame. We're looking to take the trade in to make sure it all corresponds with each other. So what I've done in this book, rather than me reading out the entire chapter, which will bore everyone to death, I've tried to highlight certain points in it which are important. And I'm just trying to put it into context with what we're talking about as well. And so I'm kind of flicking between hammer candles and shooting star candles. I apologize if it's a bit up and down. I'm just trying to find the best places to discuss these points. So just to remind us that shooting star candles not only appear in uptrends, they also appear in downtrends. And that's a confirmation of weakness, particularly if they appear shortly after the start of a lower move. The appearance of a shooting star candle in a downtrend, which follows the selling climax, could be a test of demand as the market moves lower. And that's interesting because we had this debate about testing, didn't we? So a shooting star candle is and it's what I kind of thought at the time as well. So when we have an area of demand, we're looking for a possible shooting star candle on low volume to confirm that the market's ready to be sold back down to be topped up at wholesale price again. And again, vice versa, if we see a hammer candle but on low volume after accumulation zone, is there any examples? For example, then potentially we're looking at the reversal. The test is complete, because when you think about a shooting star, a hammer candle, it starts off at the top, becomes all the way down, and then if there's no volume, they bring it all the way back up again and close it. So that's just shown that there's no buyers, there's no more sellers forcing it down. And then it's ready to push back up because there's no volume in the upward trend as well. And there's no volume by sellers, there's no weakness in that candle. So that's why we're looking for a hammer candle in a distribution zone area. and looking for a low volume on that as well. And that signifies at the ending of that accumulation or distribution zone. Does that make sense? I'm not sure if it does. I know what I was trying to say, but I'm not sure I got it out of my words, explained it very well. Yeah, turn off.
Yeah, you're looking for multiple hammer candles with high volume to signify the end of the accumulation, right?
Yeah, exactly. So a bit like that.
Yeah.
And then
But they got to be on high volume, right?
on low volume. No, the test candle. Sorry, yeah. These are the ones you're looking for at the end of accumulation.
Mm-hmm. The test candle has low volume.
And that would be, yeah, exactly. So these will be on high volume.
Yeah.
And then potentially, if we have a hammer candle there on low volume, then that means there's no sellers interested in bringing it back down again.
Mm-hmm.
And so they can continue to trend back up.
Mm-hmm.
That's how I see it. I know there was a bit of a conflict on how Ron saw it last time.
Honestly, I just see it as a retest. I see it as a breakout and retest.
Yeah, and that's exactly what I see it. Yeah,
Yeah.
exactly that. Yeah.
Yeah.
And basically, a hammer candle is that, because a hammer candle, let's see, we're going to retest this area up here. A hammer candle is just basically in a low time frame, candles coming up, candles coming back down again, or the other way around.
Mm-hmm.
Yeah, so that is it. So that would be a shooting star candle or a hammer candle, that way around. A severe lag when I do the drawing, it's about a 2-second lag when I actually see it on the screen. And that's what it looks like on this time frame. But if you go back into a lower time frame,
it'll be a breakout and or a breakdown and retest.
Exactly that. Yeah, exactly that. Yeah.
Yeah.
So that comes down, comes down, comes. I got it around the wrong way. Sorry, it goes up. Green, 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 and then red, red, red down. And that's what the hammer, and that's what a shooting star candle looks like. This one. And it basically is a break and retest.
Right. And that's what it is, right? You want it on low volume because that's when you know it's a pullback or like a
exactly that. Yeah, exactly. Yeah, yeah. And so that's why, yeah, exactly that. And it's just testing it as it moves away from the distribution phase. Exactly that.
Mm-hmm.
Maybe, you know what? If she just called it a break and retest, it would be so much simpler, wouldn't it, to understand?
That's how we understand it, though, right? Because we all learned the same way.
Yeah, exactly.
Yeah.
It says that shooting stars candles may also appear at minor reversals deeper in the trend as the downward pressure pauses and pulls back higher. If the candle is accompanied with above average volume, it's only telling us that one thing, namely the market is still weak and we still have not yet reached the buying climax at the bottom of the trend.
Mm-hmm.
This pattern of price action is the insiders selling back to the market some of the inventory they've collected from the panic sellers who had bailed out earlier. And the inventory in the warehouse has to be sold as the market moves lower. So they're trying to sell it all off before they bring it back down. And then on the pullback, some buyers will come back into the pullbacks thinking the market's bottomed out and about to turn higher, whilst others continue to sell. The price action occurs all the time in a price waterfall as the market moves lower and fast. The insiders have to stop the fall, pause, push the market higher using media and the news media to sell into the created demand, whilst also dealing with ongoing selling that it's continuing to arrive. The volume will therefore be above average or high, showing further weakness to come. So so basically when we have a bit of a pullback, they're looking to get rid of their stock, but also put some stock back in the market to allow it to pause. Mm-hmm. And then we've got the hammer candle. Who think we talked so long about a single candlestick? So basically, we talked about the hammer candle as a sign of strength, and with the selling, it's been absorbed in sufficient strength for the buyers to overwhelm the sellers. So as we just talked about the warehouse stuff, the insiders or the smart money have to clear their inventory, which has been sold off in the move lower. And the first signal of a pause is the hammer, as the insiders move in to buy, supporting the market temporarily. They may even push it higher with a shooting star candle. The hammer is signaling the forced buying by the insiders, and the shooting star signaling forced selling by the insiders. So, which makes sense. So the hammer is forced buying, and the shooting star is forced selling.
Yeah, that makes sense.
Yeah, just scanning through. Price waterfall will always pause, pull back higher before continuing low. As always, the volume holds the key. And the volume's been rising and the price waterfall lower, then this is a strong signal of further weakness to come. Therefore, a single hammer will simply not be enough to halt the move lower, even if the volume is above average. As always, the price action which follows is key, as is the price and volume in the associated timeframes, along with the price congestion in the vicinity. This is the same problem as before, and the question we always have to ask, whether we see a hammer or a shooting star, is whether the price action is signaling a pause in the longer term trend or a true reversal in trend. The power of the hammer candles, just like a shooting star, is revealed once we see a sequence of 2 or 3 of these candles accompanied by high or extremely high volume. Is at this point we know for sure that we are in the realms of a buying climax, and that we have to be patient and wait for the insiders to complete their task before they begin to take the market higher. Furthermore, we have to remember, once the buying climax is completed, we are likely to see one or more tests using hammer candles. These candles may be less pronounced than the true hammer, perhaps with relatively shallow wicks, but the principle will be the same. The open and close will be much the same, and there will always be a wick to the lower body. So we could be looking for hammer candles testing on the accumulation areas, similar to what we just described. For a successful test, the volume needs to be low too, and there also like to be more than one test in this phase. These tests can appear in both price congestion area accumulation as well as the initial phase of any breakout, as the price action moves back to an old area of heavy selling immediately above. Basically, it breaks, retests on low volume. And then, in a sense, this is interesting. There was never an anomaly with a shooting star candle, since the price action is sending a clear message on its own. As any price action trader will tell you, this candle is a signal of weakness in itself, and there is no other interpretation. So that's interesting. So if you see a shooting star candle, you know straight away that's a sign of weakness, and there's no other interpretation. A shooting star with low volume is a sign of weakness, but probably not significant unless it's a test of demand following the selling climax as we start the downward move lower. A shooting star with average volume is telling us there is weakness, but it's relatively strong signal, and the pullback may be more significant than the first example on low volume. And then finally, we have the shooting star with high volume or ultra high volume, and this is where the professional money is now selling out. So that's why there's no anomaly, because it's just showing weakness no matter. There's never an anomaly with shooting star, only ever a validation of the strength of the signal. So we're looking for ultra high volume to confirm the weakness of that candle, the weakness of the move, or average volume, and then low volume, I think it says, is not any significance. So the volume always confirms the price action with a shooting star, and all we have to do is consider whether it's low, average, or high to ultra high, and frame this in terms of preceding price action across our timeframes, and track the subsequent candles as they unfold on the chart. The same points apply to the hammer candle. Once again, there's never an anomaly with the hammer candle. The price action tells us all we need to know. In the session, for whatever reason, the price has moved lower and then recovered to close near the open. It is therefore a sign of strength, and the volume bar then reveals the next extent of its strength. And there's one exception to this, which we'll talk about next. And obviously we've got this diagram and that's drawing. So the hammer on low, average, and ultra high volume. There's not much more to say about that. Volume price analysis not only helps us get into low risk trading positions, it also helps us keep in those positions, which is often one of the hardest things to do. And I highlighted this, Glenn, for you and for myself, because it's so hard trying to stay in a position and not scalp it and hold it when we see our first weakness in the move. But if we see a hammer candle or a shooting star candle, then we can analyze the volume, which I never do, which I need to start doing, to know whether that's worthy of me holding it or coming out of it. If it's high volume and it looks like a reversal, I suppose we do in a way look at volume, but I don't see it as if I see a hammer candle, normally I'm just tightening up my stop losses and I ignore if it's low volume. I treat that the same as if I see it with high volume. But maybe a hammer candle on low volume or shooting star candle on low volume can be just regarded as a pause or continuation, just a retest. Here's an example. The market may be moving lower. We are short in the market and we see a hammer formed. Is this a reversal in trend and time to exit, or merely a short-term reversal in a longer-term trend lower? If the volume is low, then clearly the insiders are not buying at this level. Perhaps the hammer is followed by a shooting star on an average to high volume, a sign of weakness in the downtrend and confirming the analysis of a hammer candle. The market is weak and our analysis using VP has given us confidence to hold the position in the market through the pullback. So that's, I don't know about you, but that's something I need to pay more attention to. So the volume on these candles, sometimes I do panic sell. And then, because basically at the end of the day, we don't really want to be scalping small positions. We want to be holding to the end of the day and not get put off by the first potential sign of weakness we see and not realize it's, how many times we've seen a trade, we get out of it, reverses, and say, oh, that's a good out, and then look back 5 minutes later and it's high of the day or something.
Mm-hmm. Yeah, it's just tough, right? Like,
yeah,
we have a natural inclination to close down winners and hold losers.
Yeah,
right?
exactly. Yeah, and I did that today, and I did that on the very first sign of a red candle. You get out, I'm done, and I think, oh, watch it. Think, oh, why did I get out of that? I should just wait. Look at the bottom. The volume was low. I didn't even look at the volume when I got out of it. I just got out of it because I saw red.
Mm-hmm.
But yes, and just did that a couple of times.
Yeah, because we all want to be green every day.
Yeah, exactly.
Knowing full well that's impossible, we still want to do it.
That's right. But we can do it better by paying attention to the volume a bit more when we're panicking and getting out, when we have a nice big push up and think, let's get out now because it's the right place to get out. But analyzing the volume should be the first thing you need to do. Is you got an entire candle to think about getting out. What's that, 5 minutes on or 2 minutes on what you're looking at? I see the first sign of a reversal. I see a top wick and then it goes slightly red. Oh, I'm getting out. I don't like this. And then see it continue up the trend gets quite frustrating. So,
yeah, definitely frustrating. But I mean, you have to decide what's more frustrating for you. Is it watching it continue without you, or is it giving up your green and end up maybe break even on the trade, or
that's a tough one.
out?
Yeah,
That's
I'm
why
a bit
I trail
of
my
both.
stops. Me, if it keeps going without me, it's a little annoying, but it's way more annoying for me when it's pretty good profit and then I stop out for break even or whatever.
See, I'm torn in the middle. For me,
Yeah.
it's a bit of both. So,
Yeah, I got a bit of both too, but it's much less for watching it continue because I feel like, okay, If it pulls back and it's still strong, I'll get it. I'll get back in. You know, it's just instead of holding one big trade, I'll take 2 little trades. You know?
Yeah, that's me. It's I don't like watching it after I've been in it and I've got out, and that's
And
when
your
my
price is all the way
FOMO.
down here. Yeah.
Yeah, that's when my FOMO kicks in, and I start chasing the price. Oh, I'll get in now then, and then it reverses on me, and
And then you add to it when it reverses
yeah,
to get a better cost
and
average.
and all this time I'm just looking at the price. I'm not even looking at volume at all, and so it's downward spiral.
Yeah, it's crazy how that happens and we don't even realize it.
Exactly.
It's because it's a
So
habit.
I know it is a habit. It's a really bad habit, and I'm slowly coming out of it. And it's helpful because when we're talking to each other in the trade room, not only are we distracting each other, from getting into stupid trades, but also we're talking about the trade as well and analyzing it with each other.
Yeah, like today. Today was great. Yeah, we
Yeah, it was
analyzed
perfect.
everything.
Yeah,
We were looking at it.
and
Yeah.
it kept us in check a bit as well.
Mhm.
So, right, finally, if we do see a hammer candle at the top of a bullish trend, it has a different name and a completely different interpretation. It says it could be covered later in this chapter, but I might as well just cover it now.
It's a hanging
And
man.
that is called the hanging man.
Yeah.
Which I'm going to find. Here we go, the hanging man. So, and it makes sense really, and I didn't think of it. Me, every time I saw one of these, I just thought it's confirming its strength. And you think, hey, look at that, it's a hammer or a bottom tail, it's got to be strong. But think about it, it can't be strong because it's just given up the ghost for that entire candle. So you're currently here. Hang on, let's put it in black. You're currently here on your move up. You've had this big move up and you've got to here. And then suddenly that entire candle has turned red. And at one point that candle, let's make it red. At one point that candle was totally red. And so that if you paused it 50% away at say it's a 2-minute candle and that's at 1 minute, that doesn't look bullish at all, does it? That looks pretty bearish. It's not until you let the candle continue on and you see the first, go back to black, and then it continues and you see it form like that. It's only when you see it afterwards you think, oh, now that does look bearish and you expect it to go up. But it's just showing you the first sign of weakness in this move. And it's a big reversal and a push back up again. So that's an early warning sign that we could be coming to an end of a trend or that we're starting to see some weakness.
I just wanted to point out that also with the shooting star is seen also at the end of an uptrend usually, like the hanging man. So they both kind of appear at the end of an uptrend and maybe towards resistance.
Yeah, sorry, I'm just processing that. So at the end of an uptrend, if you see a shooting star like that, is that what you mean?
I just know that AJ Monte made a big to-do about the shooting star. He would always call it a bearish reversal. He'd say the market's weak. And you will see them like the hanging man towards the end of an uptrend.
Okay,
which kind of makes sense. Like you can see the hanging man in this example closed under the wick of the candle to the left as well. So that's already kind of,
Yeah, I think in fact, if you see a shooting star after a hanging man, I'm sure we're going to get to that in a second. I'm sure I've read that. There's that's a signal of major weakness because you just confirmed a little bit of weakness in the hanging man, and then at the end of the trend you've got this shooting star candle, and if you go back a few pages, Anna Coulling says that a shooting star candle doesn't matter what volume. Oh, it's the wrong way around. The shooting star candle don't matter what. Oh, that's right. Yeah, don't matter what volume you get, whether you got high, medium, or low, medium, or ultra high volume. It's a sign of weakness anyway. So that combination there my pen back.
It
So
is.
this,
They say it's a very strong handle, the shooting star, but it's don't just strictly rely on that, and that's why she's using volume too to confirm it. Because if you look
yeah,
at it alone, it may fool you, but it tends to be at the end of an uptrend, like the hanging man tends to be.
yeah, exactly. So, and that's why you know, if you see a hanging man and you get a shooting star afterwards, then that is a good reversal sign.
Yeah.
Yeah.
And more importantly, that there's an indication of like a trend is changing, which is like more important than any other analysis on some level.
That's right. Yeah, exactly. And obviously we want to see above average volume as well on the hanging man. So sorry, I confused myself now. You throw me. So he said, why is it a sign of weakness? I think the answer is simple. The market's been rising steadily. And then at some point in this bullish trend, the market sells off sharply with the price moving lower in the session, only to recover it and close at or near the high of the session, the high of that candle. And that's why it's created a familiar hammer candle, except we were to refer to this candle as a hanging man candle because it's now at the top of a bullish trend. The reasons candle is considered to be bearish is that it's the first sign of selling pressure in the market, and the insiders have been tested and the buyers supported the market, but the candle is sending in a signal that the market's moving towards an overbought area. The body of the candle can be either color, but the price needs to close near or at the open. So the price action is confirming the appearance of sustained selling pressure, which on this occasion is supported by buyers and repulse. But it is an early warning sign of a possible change. And it's an early warning signal that we now need to watch for in our charts for confirming signals. And as you say, Joanna, that's where look for the change of trend as well. The insiders have seen this as a weakness appearing too, and they will be starting to plan their next move. So the hanging man is validated if it's followed by the appearance of a shooting star in the next few candles, particularly if it's associated with above average or high volume. The key here is validation. On its own, it's not a strong signal, but merely gives us an early warning of a possible change. So if we see a hanging man and a shooting star in the same area, then keep an eye on that. For this candle to be validated and confirmed, we need to see further signs of weakness at this level or close to this level. Sorry, let me restart again. For this candle to be validated and confirmed, we need to see further signs of weakness at this level or close to this level, which would then increase the significance of the candle. For example, a hanging man immediately followed by a shooting star is an excellent combination and adds considerably to the strength of the initial signal. Even if the shooting star appears later in the candle sequence, this is still a strong confirming signal, provided it's associated with high volume. So if we were to see a hammer here, and then we saw a shooting star later, you could say this is an area. I'm sure, like, it's not a real decent shooting star. Shooting star there, not a very good one, but that's a bit wide, that one. But yeah, so we could be starting to see signs of weakness. See, and that's why it threw me into it, because I've always been seeing this as a sign of potential strength. And when you think about it, it's obvious, really, isn't it? We've had selling off here, we sold off here, but we came back up again, and we're starting to see weakness already coming in. So, and that basically sums up shooting stars and hammer candles. And one thing next is just briefly go over, not much left now, long-legged doji candles, and potentially I may have some screenshots I took earlier. I'm sure one screenshot had everything. my notes in a sec. Anyway, so this type of doji candle is both upper and lower wicks are in long comparison to the body. So we're looking for a small body with long wicks both directions, and the power of the candle lies in its predictive power as a potential signal of reversal in a trend. And I don't know about you, but I've always ignored these as a trend reversal. I've only looked for top-in tails or bottom tails, and I never look for long-legged doji candles. So hopefully something will change tonight. The price action reveals the sentiment, which in this case is indecision, which is we know, and therefore possible reversal. The long-legged doji can signal reversal bearish to bullish or bullish to bearish and change in the direction depending on the preceding price action. And if we've been in an uptrend for some time and a long-legged doji appears, and this may be the first sign of a reversal in a trend bearish. However, unlike the shooting star and the hammer candle, the long-legged doji candle can have an anomaly in volume. This is why it's quite interesting. I'm just going to explain why. So why is low volume on such a candle an anomaly? If you think about it logically, the market has moved sharply in both directions and finally closed back to the opening price. The price action is a sign of volatility in the market, and as the market swung back and forth in this session, if the market was not volatile, then we would not see a very different type of candle. So I'm trying to read it, but I'm scanning for it. Therefore, if the market is volatile, why is there low volume? Volatile markets require effort, and as we know, effort and result go hand in hand. However, in this instance, we have no effort, so low volume, and a big result, a wide price action. So let's just draw it so we can visualize it. So we've got a wide candle with no volume. This is an anomaly, and the only logical answer is the price is being moved by the insiders who are simply not joining in at the moment. The most common reason for this is stop hunting, and where the market makers are moving prices violently in one way and then another way to shake traders out and to take the stop out and to limit orders in its process. They're not buying or selling themselves, but simply raking the price around, generally using news release as a catalyst. So you probably see this at 8:30 in the morning. You know, you get some news come in and you see it push all the way up, from all the way down, all the way back up. And then we start seeing some price action afterwards where we know, and then it comes with volume. So I think I'm going to scan through it. The reason, basically, if you see low volume on one of these candles, it means this market insiders or smart money moving the market and not have no point doing anything. But if you see increased volume or ultra high volume, then the market is moving with this. So the reason we know this is happening is volume. Hang on. Okay, so let's go back to the news again. The long-legged doji is seen most often during a fundamental news release, and the classic one for the US markets is the monthly non-farm payrolls data released on the first Friday of every month. Hey, that's tomorrow. On the release, price behavior becomes extremely volatile, where this candle is created repeatedly. When the economic data such as this is released, the market swings violently one way, then the other, and then perhaps back again. It is the ideal opportunity for the insiders to whipsaw traders in and out of positions fast, taking out stops and other orders in the market at the same time. And the reason we know this is happening is volume, or rather lack of it. If the volume is low, then there's not a genuine move, but an anomaly. For the price to behave in this way takes effort, and we are seeing this with no effort, as shown with low volume. The insiders are simply manipulating prices, and in this case, the long-legged doji is not signaling reversal, but something very different. So it's insider manipulation on a grand scale at this price level. The next point that leads on to this is from being an interaction between volume and the news. Whenever we have economic release, a statement or a rate decision or any other item fundamental news, then the associated volume reaction will instantly tell us whether the market is validating the news or ignoring it. In other words, here Here, two volume validates the news release and tells us immediately whether the market insiders are joining in any subsequent price action or waiting on the sidelines, staying out. If the insiders are joining in, then we can too, and if not, we stay out just like them. For example, when a big number is released, say NFP, which is seen as positive for risk assets such as equities, commodities, and risk currencies, and perhaps we are trading a currency, then we should see these assets rise strongly on the news, supported by strong and rising volume. If this is the case, then we know the markets have validated the news and the insiders and the big money are joining in. We might see a widespread candle with high volume. The news has been validated, confirmed by the price action associated volume. I would argue you study volume whenever news is released, as it's one of the quickest ways to learn about the basics of VPA. So tomorrow, I think we've got news, haven't we? Might be worth just watching it at 8:30. Is it non-farms? Here you go, non-farm payrolls. There. So there's another trick I will talk about, maybe not tonight. Something I've been watching. Let's get back to Kindle. So tomorrow morning at 8:30, we should keep an eye on the non-farm payroll and sit and watch where we get this little long-legged doji with low volume, or we see follow through. When news is released is often the first place where we see volume surges in the market, and they are excellent places to start analysis. If the volume surges validate the price move, then we can be sure the insiders are joining in the move higher or lower. If the price action has moved on the news but has not been validated by supported volume, then it's an anomaly and other forces at work. This is telling us to be cautious. And I think that's pretty much it. A long-legged doji candle should always be validated by a minimum of average volume. So we're not interested in low volume, average volume, or preferably high or ultra high volume. If it's low, then it's an anomaly and therefore a trap set by insiders. If the volume is high, we must be patient and wait for a subsequent price action to unfold. Let's get back to the chart. Nothing there. That's better. So that's basically all the candles covered, and then we know about widespread candles. Where we are. We're pretty much done at the end of it now. I was trying to find some examples earlier. I've ran out of time looking for examples of here we go. That's what I was looking for earlier. That's a long-legged doji. Sounds like something you get in a zoo, doesn't it? Or something the kids would hold at a insect farm or something. But I just want to go to 8:30 yesterday because I want to show you something when the news came in, which is quite interesting. Big volume spike as well. What's it? Might have been the day before. Something I did notice, and I forgot to put my trend lines on it. But there was an area, if you draw the trend lines on the top and bottom of any news release, in the day, I think during the day, that area was tested several times. Here we go. So 8:30. I've not got my normal chart open, so I don't know why it's putting on horizontal line. 8:30 there. Go back to align what matters. I've got a different layout on that one, so it makes it hard for me to use. But if we go to 8:30, so that one there's at the payroll. Whatever the news was at 8:30, I put a trend line. It's not there now, but in the entire day, it bounced off the trend line several times, came back, it broke through, and it used that news data, because that's where the algos are trading, and the algos kick in on the news, and it gives you a little area where one of the guys I was watching on YouTube explained it really well, and I'll try and find his video. And the algos kick in on news, and then you've now got a channel where those algos are trading for the rest of the day. So they're the areas they're aware of. I'll dig out the video. It's really interesting. And it's something I've been watching. I've been watching it for a few days as well, thinking, oh, the news is more significant than it is, because you can actually see price action, which is on like algo trading around those areas where the news is released, you know, where the tops and bottoms of wicks. Anyway, so just very briefly go over the last few widespread candles. Widespread candles are showing a clear signal, only one message. Sentiment of the session is strong, it's bullish, and however the volume is low or below average. It's warning of an anomaly. We know what anomalies are because we've talked about anomalies. So wide candle, low volume is an anomaly where you would expect to get a wide spread candle with above average volume. And then narrow spread candles. And the reason we need to consider them is that in general, the markets move higher slowly. Markets pause, consolidate, and reverse, and often on narrow spread candles. Therefore, the interesting ones are those validated by volume, but the anomalies. So we're looking for anomalies which are higher volume on narrow spread candles. And these are showing potential weakness in that trend, especially if we're looking for a change of trend. I think that's it, pretty summed up that section. And the hanging man we've discussed. And we know what stopping volume is, don't we? I think we talk about it enough. But stopping volume is when trend is coming to an end and we have a widespread candle followed by another smaller, a widespread candle, and the candle's getting smaller and smaller, but the volume is increasing, and it's almost like it's putting on the air brakes to slow down. So it's slowing down, slowing down, slowing down, slowing down, and then we get a hammer candle at the end to say that we've almost slowed right down, and then we can wait for the reversal. And the same on ending volume, or topping out volume, it's called here, where putting the air brakes on, it's slowing down, slowing down, slowing down before it finally comes to a slow. And like we described there, it's a bit like a tanker or big ship at sea. When it needs to stop and turn around, it can't just stop on a dime, turn on a dime. It needs to slow down slowly, and that's similar to what we see with the markets as well. Is there any good points we can just and that's just the insiders absorbing some of the pressure with prices recovering from the session to close off well with low sessions. And that's pretty much it. So my eyes, I can just about read this. I've been a bit unwell this week. My eyes are really, really killing me. So I apologize if I've missed words out and I didn't read them properly. But I don't know if we've got any good examples we can see. If anyone's seen any. Let's have a look on. But I want to be, if it's okay, I want to be done pretty soon because I need to rest my eyes and have a break from it. I've been on it since too long today. I'm looking at SPY. I'm looking for some good reversal candles. Oh, I wanted to show you something. My my silly trade, which we just talked about, and I'm not. Did I explain it earlier where I said I went long into this trade? No, I don't think I did. So today I was coming in bottom of a supply zone as well, or it would have been a demand zone, and I was looking for a long entry, and I had this daily level here, so that's what I was watching for, and I saw this bottom tail, and got really excited, and so I went long on the break of that bottom tail, And can anybody see what the floor was in that move? I know we know what happened next, it tanked, but can anyone see why that was a bad move? Two bottom tails is normally a no-brainer.
It made a lower high, like it's in a downtrend.
No, I was looking for a reversal. I'll point to it down here. Can you see the volume?
Mm-hmm.
So we had this bottom tail. Well, it's not a convincing one. This tail on high volume, and that's what I thought we're getting near to end a stopping volume, and then we had this candle then on even higher volume, and I was getting excited. You know, I was licking my lips at this point, and then let's put the timer on, and then when I saw this bottom tail, I was really excited. So that's two in a row, so I'm going long. But look at it, it's on much reduced volume. We should see it on increased volume if we're going to see a reversal. And I got in long, as you can see, I tagged me in and pulled back on me straight away. And I did take a little bit out, but I ended up making a stop at the bottom. I think at the bottom of this supply zone I got out for. It was a break-even trade in the end, so I made a little bit there and stopped myself out. But after we talked about the volume today on candles, what we should have been looking for was something like this: high volume, even higher volume, and then even higher volume, and that would have validated this move, and we would have seen potentially the move, the direction I was hoping it to go in. And it wasn't until I was reading the book earlier when I realized that's exactly what she described, and it's exactly what I didn't do. So there was no validation. So next time we see two bottom tails, and here it worked okay. Look at this one. So here we had high volume, higher volume. Oh, there you go. So technically that's lower volume, but that's pre-market.
I know.
So
Paul, I was kind of looking at the green
Yeah.
on the left of that.
hang on,
Hammer.
let me mute Michelle. Sorry, say that again.
I mean, it's kind of a green bar. Red took out that green bar
That
before
one.
the hammer that you looked at.
That one there.
No, before it.
That
Before
one.
it.
Oh, where
Before
am I
it.
going?
The one more.
Oh, that one.
Yeah, that red taking out that green so dramatically would have made me worried. And then that big topping tail bar at resistance, sort of like it was a lower high. Excuse me. You can see that.
Yeah. No, that is right, but I don't really play chart patterns really. I play supply zones and support and resistance. And I was waiting for this area, and this is the maximum, the lowest I would have gone. That's where I was waiting. My first today I had a limit order sitting there on the open. I cancelled it, and I had a limit order sitting up here as well. So I wanted to go short here, and it came close, but I didn't get triggered in, so I cancelled that order. But I also had an order here to go long, and but
Yeah,
when
I see the double top. I see the double top, and that would have been like already like this is going down, and then that green bar taken out may have made me wonder. But because the reason you wanted to go long was because you saw two hammers in a row at support.
I saw three in a row.
Oh yeah, there is a third one.
Yeah.
Okay.
And you know, to be fair, I went long on the two candles. As soon as that came up, I went long, and it put in a hammer candle. And you know, normally that would have been great, but the volume didn't validate it, is what I was trying to say. I should have been watching the volume.
Well, obviously your initial instincts later paid off many minutes later, but many moments if you just held it and held it and held it eventually.
Oh yeah. So, but my stop was always going to be there, because that was my well, originally that would have been my limit, because this red zone is one of the zones I put in, and if I break past this area, then that's a stop out, that is. And look at it, and that's why it's there for that exact reason. But I didn't like the idea of it coming right back on me. So I took a little bit at the top, and I come out. It's a break-even trade, but
This was like a W bottom.
I could have saved the stress of it though by not getting into it when I noticed the volume wasn't validated.
But this is a good W bottom. Do you see it?
This one here.
Yeah. Nora used to always talk about the W bottoms.
See, that wouldn't have been on my radar to take. This area here was, because it's coming into a demand zone. But so had this got down to here, this yellow line, you can't really see it on here because I don't use the white chart. I always use this chart because it's clearer.
What's that zone mean to you? That's where buyers.
That is my demand zone. So I don't always take it. Sometimes I take it on the entrance to a demand. This is an hourly demand zone. Let's go to yellow. So
where's the 50 on yours?
Say again, sorry.
Where's the 50 on yours?
50 is this red line.
And where's the trade that you took?
The one I took today.
The one that you wanted to go long on?
Oh, well, I took this one in the end, the break of this head and shoulders pattern long up into the VWAP. But the one I wanted to take was here.
Because you know, I would have been like freaked out by the 50. Like if it gets rejected off it's like 50 times at the hourly, it's being rejected. I would have been like, that's another big one. Because I was just listening to one of my many videos that David and I would talk about stocks. And he's like, if it's rejected on the hourly at the 50, I don't know. It was an interesting, yeah.
Well, I mainly play reversals, and every reversal will be below the 50 or above the 50. So I normally trade against the trend. So yeah, so it makes it hard. Like here, I would have gone short up here, but you would have the same opinion. It's above the 50.
Oh, that's true. Yeah, but it's away from the 50.
Yeah,
it's not trailing the.
Yeah. You could argue that's quite far away as well.
That's true. That's true.
So
this is where the mental masturbation begins.
Yeah, exactly. And even though that is much further away, that one, but yeah, that's just the way I do my trades. And I just need to manage my risk so that if it does go against me in a reversal, then I'm out in this area and don't let it.
It's also like right in the middle of a channel in a sense. Like it's in no man's land for me. I don't know if that was it. Like it's certainly not at the top anymore, and it's certainly not at the bottom. To me, that's like a no man's land because like too much can happen in the middle. It's such a mental game in that point. It's like you're getting chopped out in a sense because it's certainly not at the top, and it's certainly not at the bottom. I mean, that's where it always gets really frustrating. That's why I'm like, I'd rather be a sniper and get it at the top and then not go through the mental masturbation of it.
Yeah, I had my order in place at 4,300 for a short, and it would have, had it got to my area, it would have whipped me in and instantly gone. It would have instantly tanked. That would have been a good trade, but I missed that trade. So you could call that a sniper trade, possibly.
Yeah.
Yeah. Well, my style would, I only play support and resistance and supply and demand now. I don't really play many patterns. And if you look apart from this wicket or even that, every level I've got in, you can probably make a trade off of it. Yeah. So you can definitely make trades off of that level there. You can definitely make trades off of that level there. You've got this level here, this level. And bear in mind, these levels have been here for weeks. You can potentially say that's a level to watch for. This level down here, that's a zone that I've not been in play yet. We haven't got to that area yet. But even this area here, these levels are in play. That's been in play. So, and even that level there came back into play here for a break and retest short, and that was in play. and I've been really successful doing it like this. I've changed my over the last 6 months. I've changed the way I trade. It's less stressful now because I'm waiting. I know what trades I'm getting into before the market's even opened. I'm not watching I don't watch for patterns anymore. I use patterns as a booster or as a an ad. But today was a funny day. It wasn't a very good day for trading anyway. I still did okay. Did quite well actually. But the levels are always in play. These levels, look at these levels, just come up there. If I just, because I find a way of getting these levels. Like today, I was a bit short on that level, but usually I would put some orders in. I'd layer in. So if I catch one of the levels, so for example, that comes in, it'll trigger me in there and go against me, and I won't be sitting there waiting for this level to come into play. I would be in with like a quarter of my size, and then I'll get in another quarter there, another quarter there, and then I'll look to find an ad for my next quarter, a break and retest or something. So, and I find that way of trading much more relaxing, stress-free.
Yeah.
And because I already know my levels. Like for example, today my level always was that area, and that area, well, this entire zone as my out. And so when it came into that area, I did have a limit order in case I wasn't around, but I cancelled it. I was waiting for confirmation, and that's my confirmation, the break of that candle. But on hindsight now I know why it didn't work, because I didn't validate it with the volume. And I don't usually look at volume on bottom tails or hammer candles, because usually if you look at every single hammer candle, you just need to go to midday today. Look at that candle. Even if you don't look at the volume, it worked. You had 2 hammer candles in a row there. This one, well, it's not quite a hammer candle, but close. But that one there, close to one. And you could say volume didn't really validate that, because the next candle was lower volume, but it did work perfectly. So, yeah. And it's, it's down to interpretation as well. And it's more of a, Anna says it she says in this chapter, it's an art form rather than a algorithm. That's why it's open to interpretation on how you trade volume price analysis. Because a computer will be looking at, I see this right now as decrease in volume showing potential weakness in the market. And let's have a look. So we've got decrease in volume showing potential weakness in the market until there. And then suddenly we've broken out. So if you're watching this, if you're watching the volume and you see weakness in the market because it's reducing volume as the day goes.
Yeah.
And then you see these 2 big candles here, then that validates this volume price analysis for this part of the market. And we saw the big push up.
What, Paul, why are those 2 candles white?
I wrote this is a indicator I created. White candles indicate ultra high volume. It draws my attention to them. So it should be green. That's the same as a green candle basically. But if I'm not looking at it, if I see a white candle, then suddenly I'll stop doing what I'm doing and have a look, see why it's white. So let's have a look. We've got ultra high volume on that candle and that candle. The move's gone by then, but on some moves you can pick them up early.
That was a powerful move. I mean,
It's
a really good move right there.
So that's ultra high.
Yeah, they got confirmation that it reached the bottom with that hammer, and then I wonder if there's going to be a Santa Claus rally this year. I feel like,
don't know. Well, I'm long queues at the moment in a swing trade. I've been for a few days, and I think it's at break even right now. Still, I don't know what queues are done today. Oh no, my break even's here, so it's actually better than break even now.
Yeah,
not by much. So again, the only pattern I play mainly is the head and shoulders pattern. So in the queues, I saw this on the daily, this is the hourly chart. and I got the breakout of the neckline. And I wish I was going to add on the pullback, but I didn't in the end. I'm glad I didn't, obviously, because it was looking pretty like it wanted to break out, but then it just folded. But it hasn't put in a new daily low, so I don't know what's going to happen. We couldn't, still trying to fight the 200 moving average, and we've got I think we're going to see a push up over this tomorrow.
Yeah.
I'm willing it for my swing trade, obviously. I'm here every night. You can do it. So,
Thank you so much.
has anybody got anything they want to add? No.
I think these are great discussions. Thank you for doing the work and assembling it.
Well, I've not read it for such a long time. I had to read the chapter today, and I'm still a bit under. I've had a bit of a chest infection. I'm on antibiotics at the moment, so my brain is not quite with it at the moment as well. So I don't normally I don't know what they're doing to me. Apparently, the antibiotics I'm on, it apparently makes my skin burn in sunlight. That's what it says on the packet. So,
Oh my God.
yeah, so I don't know what they are, but my chest is much, much better. You know what? I'm surprised I've not been coughing my guts up doing this, because about an hour before, I was thinking, oh, I don't think I'll be able to do tonight. But I've got a throbbing headache while I've been coughing all day, which is not nice. But, you know, it is what it is. So it'll be okay in a few days. So look at this on the SPY bottom, a hammer candle at the bottom.
Yeah.
On lower volume though. So what's our take of that?
Wait, is that a hammer candle or a hanging man? No, I'm just kidding.
Well, is that a bottom of a trend? So it'd be a hammer candle.
Thank you. Yes.
We've had a hammer candle already, don't forget.
Yep.
So, and that was on increased higher volume than the previous day. And don't forget, if we go into, I've seen it, look at the weekly. Okay, this is interesting as well. Look at this. So we got bottom tail. So this is an anomaly. So we got this candle, wide range bar candle on this volume down here, on this volume here. And then we've got a smaller, half the size candle, bottom tail as well, interesting, on increased volume. And then this week, we've almost put in just as much volume as last week. We've still got a day to go. And potentially it's a hammer candle. So if we push up tomorrow, that will be a hammer candle and in possibly increased volume as well. And that will be validating this move for potential move back up. And you said, are we going to have a Santa rally? Maybe this is the answer to it, or the start of it. Wasn't able to close below the 50 on the weekly, and we're not able to break down through this concentrate area of volume from this volume profile. That's why I went long on Qs. So that's my reasoning behind going long on Qs. And Qs is looking a bit stronger. If we go into NASDAQ, look at the weekly, well, look at the daily. Unlike the ES or the SPY, it's put in a double bottom, whereas the SPY came down and put in a lower low. So that's the reason I went on long Qs, was because of this. And let's go into the weekly. Now this is interesting. Not really a hammer candle, but a fairly significant bottom candle. And you've got that candle as well, which is almost, assuming tomorrow we're going to have more volume coming. This is showing a potential reversal. And then maybe next week we can break over that area there for the push up for the Santa rally. Draw my Santa Claus. There you go. It's his hat. This is Santa Claus being really happy because he took money in the market.
I think I say that only just as a warning, like don't think, oh, we're just in a downtrend and that's the end of it, because you never know. Like there's a lot of rallying sometimes at the end. Like don't be fooled by a bias kind of thing, you know?
No, that's right. I'm not. I'm playing the chart on a daily basis, and obviously watching the weekly as well. By the way, if that Santa Claus came into my house at Christmas, I'd be terrified.
You know, the weekly could be a potential head and shoulders pattern, not a
Hmm.
like a lopsided one. You might be buying into a head and shoulders.
This pattern here,
Yeah,
as in like one like that, do you mean?
yeah. Well, you see how this green bar at before that sell setup green bar. Keep going left. Hold on, let me pull it up. The green bar at on Monday, the 10th, July.
Monday, 12th of June, that one.
Hang
Oh,
on.
sorry, this is the weekly chart I got open.
Yeah, the weekly chart, the one on July. It's open Monday, July 10th. Yeah, to the right, that
Oh,
one.
that one. Okay. Oh, yeah.
Right. Yeah, so that this would be the start of your head, but the one way before it, that green bar to the left, yeah, that's your head. This is your shoulder, exactly. And this other green bar is your right. There you go.
Yeah, I got you.
See, that's what I'm seeing as the head and shoulders. Also,
Interesting.
the daily is in a downtrend. So the most likely like next couple of days or next few days will make a lower high. That's like probably the most likely scenario, right? This
Yeah.
could be a lower high that it made right here and a continuation down. I understand what you're saying about the candles, but the overall chart structure looks pretty bearish.
It does. You're right. I'll be interested to see what the next few days gives us. But this is why I'm convinced we might be coming to an end of this trend and changing reversal is the increase of volume we're seeing.
Okay, I got you. Yeah. Yeah, and plus like this bounce that it put in, it's not a very meaningful bounce, and it came back and double bottom there. So
Yeah, it's not done much. Yeah.
yeah,
And
so the
you're right.
daily could be changing directions. And could you switch back to the weekly? It's just the weekly looks bearish, and I think
An inverse.
the monthly is bullish. Yeah.
Yeah, and it is. It's broken that pivot, so it's definitely confirmed the downtrend.
Mm-hmm.
We can join trend line in now. But who knows what it's going to do? There's only one set of people who know what's going to happen, and that's the smart money. They've got it planned out already. The
Yeah,
people who are
we'll see what
manipulating
happens.
the market. Yeah. The market manipulators, that's what they should be called. Because that's what they are.
Anna calls them something. What does she call them? She's
Insiders.
the
Insiders.
insiders. I love that.
Yeah. Who says smart money? That was yeah, I've heard someone else call. I like the smart money. I like that
Mm,
because I like to ride on the back of the smart money. So if they're going long here and they're putting all the volume, I want to go long with them. That's why I call it the smart money. Or if they're gonna tank the market here, then I want to be riding on the back of that whale as well. And we're just the dumb money, just with the what do you call it? With the bottom feeders, aren't we? Trying to catch what they're throwing back in the water afterwards.
right.
Yeah, the seagulls. That's what we are. We're the seagulls. Yeah, but I think the next week or so, well, I'll be interested to see what tomorrow gives us. If we have another day, or if in fact, if we break today's high, we're finishing on a green candle for the week.
Mm-hmm.
thereabouts. We need a break.
Yeah, and the Qs don't look like they want to confirm a daily downtrend.
No, it's a tough one, isn't it? It's really hard.
Yeah, they're holding the daily, so I
Yeah,
mean that's bullish, right? Like today they defended it, what, for 45 minutes, something like
yeah.
that. So,
Is that what it was? Yeah, exactly.
and then put in a bottom tail on the daily, so
But it couldn't break
definitely
yesterday's high though.
bullish. Yeah,
So,
yeah. We'll see if this level breaks. If this level breaks, then the daily downtrend's confirmed, and then it's probably going to reach the 200, something like that.
yeah. So basically, we got 2 areas to watch. This
Mhm.
area or this area.
Yeah, yeah.
That's it, really.
What's
Yeah.
your purple line, Paul?
That's the 200 moving average.
So it's tilting kind of upward. That's interesting.
Yeah,
That's because the monthly is making a bull flag, right?
Right.
So,
Wow. Crazy.
there's the monthly. Yeah, true. Actually, look at the monthly.
mhm.
It looks like it's curving around. Well, no, it's not curving around. That's me. That's me making an assumption. I don't know this. It's just
Hmm.
put in a double bottom. Don't make assumptions. Just say what you see.
This is the level though that it needs to bounce from if it wants to have a higher probability of making a new high and going to all-time highs. If it continues down much lower than this, then it can easily put in a lower high and drop,
Yeah, it's
right?
true.
Like it can peekaboo you in on this monthly bull flag and put in a lower high, like lower than the most recent peak, and then continue downward.
Yeah,
But if it bounces here, it's most likely going to break that peak. I'm only
interesting.
saying that because of the fib levels.
It is interesting. Do you remember what you said about the hanging man?
Mm-hmm.
Yeah.
And it's
There it
definitely
is
shown
right there,
weakness
eh?
since we've seen that. So there you go. That's confirmed weakness as well in the last 2 months.
Mm-hmm. Yeah.
There's fibs.
I see. I drew my fib from the green bar to the right. To the right.
That one.
No, no, no.
That one.
That one. Only because it broke the low of the previous candle. So that's where I
Okay,
got
yeah.
my fibs. Yeah.
So it's a pivot, yeah.
Yeah.
So it's got some movement down.
Mm-hmm. So right now it's retraced about 32%, 33%, right?
It has, yeah. Hang on, let
So
me.
if it comes down to the 50% level, I think it made enough room to put in a little bounce and then continue lower. Like the 50% level for me is kind of like a tough one. You know, it could go higher, but it could also put in a lower high and go lower. I like it when it pulls back to like the 30, what is that, 38%? Yeah.
Yeah, it's right
And
on the 382 now. That's where it
yeah, so
touched
if it
it.
bounces here, yeah, if it bounces here, I believe it'll break that pivot. But if it goes down to the 50% or lower, I think it could make a lower high.
Yeah. And don't forget, if it gets down to the 50%, that's also the 20 moving average on the monthly as well.
Mm-hmm. Mm-hmm. Yeah, that's why the 50% for me is a tough one. It's tough to call for me.
Yeah.
If it goes lower than that, then a lower high is probably most likely.
And don't forget, all the algos are watching the 618 as well.
Mm. Why do you say that?
Because the algos use fibs, don't they?
They
Oh,
do,
you
right?
thinking they're gonna bounce it over there?
They probably would if they could.
Mm.
Where's our golden zone? So I've got 2 levels. So that is a 382 and a 50%. This is a 50% and a 618. So that's a good level there.
Mm.
See, they're both.
They're both coinciding there, yeah.
Yeah, and that's using this level and that level. I like putting them together because I like to see where 618 and 50 merge together.
Yeah. Yeah, like right now, a higher low on the monthly is definitely on the cards. But depending on where they put that higher low in, then we might get a lower high after that.
Yeah.
Right? With all this upside move, a higher low is definitely most likely. But depending on the pullback here, right?
Yes, right. Well, hopefully we can just bring up to about here, then I can get out of my swing trade and I'll be happy. And then
That'd be a
whatever you say, then
sick
I'm happy to
swing
go
trade. If
whatever
you
you
got out
say.
up there, that'd be amazing.
It would be amazing, yeah. Oh, I think I've only got 2 weeks left on it anyway, so we've got to
It could
move.
definitely, yeah. I mean, it could definitely go there, put in a lower high, and you get out and still roll over and you still make your money. You know, because we're talking monthly, right? You're not trading the monthly unless you are. I think you're
No,
trading
I'm not. I'm
daily or
trading the
monthly, right?
daily.
Yeah, yeah, okay, yeah.
So my entry is it? That's the Nasdaq, but yeah, I think my entry is around about there.
Mm.
So
All right.
Qs.
I'm curious about your swing now.
Yeah, that's my entry.
The only time frame I don't like is the weekly. The monthly's bullish, the daily's bullish. It looks like the hourly's bullish. So it's just the weekly that looks bearish. So
Yeah, well, look at this one. This is the Qs. It's putting in higher high, higher low, and it's making a decision now which way to go.
yeah, it could be a potential trend change for sure. If it breaks that
Yeah,
high, it's back in an uptrend.
just needs to break that to confirm a daily up.
Mm-hmm. Mm-hmm.
That's it.
But it has that gap fill to contend with too, right?
Oh yeah, yeah, as that.
Yeah, right there.
Yeah,
So it could make a weak new high and
that'll
still
do.
roll over, right? That would be bull exhaustion, right? If it makes a weak new high.
Yeah, 364. That'd be my out then, I think.
Or at least take partial would be a suggestion too.
Yeah, yeah, it's not a bad idea. I almost added to it today as well.
Mm-hmm.
So, but I thought no, I'm gonna hold off because for the like we just had in this conversation, I don't know which way it's going really.
Mm.
Other than that's not broken. My out was always going to be there, but I might make my out there now. I think because it's a contract as well, so it's going to decay out now with 2 weeks left. So I need to get out of it sooner rather than later.
Yeah, if this new higher low breaks, especially if it peekaboos over the top of that pivot and then comes back and breaks this low, I would get out 100%.
Yeah, that's what I'm going to do. That's what I will do. Let's just draw this in.
Yeah.
Let's draw this in.
Yeah, I would get out of that if it broke that for sure.
Yes, I'm hoping it pushes up through that now. Yeah, well, we'll see.
Mm-hmm.
But hopefully tomorrow we have a nice big green day and we have lots of anything of importance.
I mean, tech is looking strong again, right?
It
And
is, isn't it? Yeah.
I honestly think that we will get a rally into the end of the year, and then we'll get a boring first half of 2024. And I think in 2024, it's going to be just kind of a sideways monthly consolidation. You know, I think it's going to put in a higher low and then kind of put in a lower high, higher low, and just kind of chop sideways for like 6 months, you know?
Yeah. Yeah.
Could be
Sounds
the
about
whole
right.
year. Could be 2024 looks to be a boring year, but I hope not.
2023. Look, that's what we did in 2023. Didn't do much.
Mm-hmm. Yeah.
We had our rally. That's our rally.
Right?
December, we pulled back a bit. Oh, we did pull back in December.
Yeah. So we'll see, right? Because of high interest rates and all these things, nobody has any savings. Everyone's, running on fumes. Food costs are ridiculous. So we'll see if we get that rally, right?
Yeah,
Because guaranteed spending is going to be less at the end of this year, right? People just don't have the money to spend.
that's right. Yeah.
So there's going to be an uptick in spending. Absolutely, there's going to be an uptick, but is it going to be the rally that we're used to, or is it just going to be something short-lived and everything's just going to fall back, right?
Mm. Yeah, no, it'd be interesting. I'm looking forward to see where we go.
Yeah.
Anyway, I'm gonna shoot on now because my eyes are killing me. I can just about see the screen.
Yeah, perfect, man. I gotta run too.
Yeah, thank you for
Thanks for
your
doing
time.
this. Yeah, thanks for
No
doing this.
worries.
Learned a lot, man. I'll talk to you tomorrow, eh?
Yeah, have a good one. Take care.
You too, bye.
See you later, Michelle. Bye bye.